Thank you. I'd like to discuss legislation I co-sponsor with Senator Donnelly that Mr. Polychrome mentioned earlier, Senate Bill 682, the Preserving Access to Mortgage Manufactured Housing Act. Ms. Gordon, I'd like to start my questions with you. Were mortgage loans a prime driver of the financial crisis in 2007, mortgage loans to manufactured housing owners?
So actually, mortgage loans to manufactured housing owners have been a problem far longer than the financial crisis. There are two different ways that those loans can be titled. They can be titled as real estate or as chattel. And the chattel loans have long had far fewer consumer protections. And those loans have always been a lot more expensive than loans for site-built homes. And so the many households who rely on manufactured housing, which is, a really important, as you know, I mean, in your state, actually, I'm looking around the room, in all of your states, manufactured housing plays a really important role in some communities. That was in particular need of consumer protection even before some of the excesses that were associated with the Wall Street private label securities, because you're right, the manufactured housing didn't really have that intersection. I think it's really important to help increase safe and affordable credit for manufactured housing, and in fact have been urging the Federal Housing Finance Agency to include to incentivize more and better manufactured housing loans through their duty to serve rulemaking by actually including chattel loans as well as real estate titled loans. And I think that's going to be a really important effort, and I've also been working with some business groups on that. I don't think the right way to go about solving the very real problem of credit for those loans is by removing consumer protections that attach to higher cost credit.
So I infer the answer to my question is no. Mortgage loans to manufactured housing owners were not a prime driver of the 2007 to 2008 financial crisis.
Well, they were not a prime driver of what happened on Wall Street, but they were very much a part of the lost wealth and foreclosures of families.
Were those loans a primary part of collateralized debt obligations or credit default swaps that caused the problems that led to the financial crisis?
Absolutely not.
You state in your written testimony that if our legislation passed, the Preserving Access to Manufactured Housing Act, quote, a lender could charge nearly 10 percentage points higher than a prime mortgage rate, end quote. I infer that you think that is a bad thing.
So higher cost loans are sometimes, I mean, there are a lot of reasons, a lot of good business reasons to charge higher rates under certain circumstances. But studies have repeatedly shown that higher rates are actually in and of themselves an additional risk factor. So if you are if you are in a situation where those higher rates are important and necessary, giving consumers some extra protections against other predatory features is really important.
Section 1431 of the Dodd-Frank Act empowers the Consumer Finance Protection Bureau to allow points and fees up to 10% on high-cost mortgages. Do you think that section of the Dodd-Frank Act is not sufficiently protective of consumers?
Well, what Dodd-Frank did was they actually revisited the thresholds that had previously existed for HOPA loans, which are the high-cost loans, and those thresholds had been established at a time where generally rates were really, really high for all mortgages, and they adjusted them downward to reflect the new rate environment. And I should note that the CFPB actually has extremely broad exception authority to virtually everything in this statute, and working with the CFPB continues to make sense, and they've continued to balance interests pretty well. But I don't think there's any reason to revisit the statute now.
So I would note that our legislation simply acknowledges the economic fact that mortgage loans for manufactured housing are often a quarter of the cost of homes for site-built homes, and the origination costs, though, don't always fall that low, and therefore these fees can therefore be somewhat higher. Mr. Polychrome, would you like to describe the importance of manufactured housing in places like Hot Springs National Park, Garland County, and Arkansas?
Yes, manufactured housing is a big part of especially for minorities, for people that can't afford the higher-priced homes. I would submit that even if the cost was, say, 10 basis points higher, a lot of times that manufactured home buyer can still purchase a home and have payments less than he would with a higher-priced home, and I think that individual would like that option.
And would it be fair to say that sometimes that can even be lower than what they might be paying for rent in
Would
places
be,
like Arkansas?
by far. Rents have gone sky high in our state, mainly because the difficulty to get credit. I foresee renters at some point, hopefully soon, converting to home ownership again.
Thank you.
Senator Menendez.